industry. Welcome, sir. It's obviously always great speaking with you. Let me first start off. You've reported better than expected Q2 numbers, revenue up 5%, volumes up 11% QOQ in what ought to be a seasonally weak quarter. What's aided volumes? Give us a sense. And which segments have aided growth? Give us that feel as well, and the outlook for H2.
So yeah, you rightly said, I think our production and sales volume were quite strong in the last quarter, in spite of a seasonally weak quarter, because we had prolonged monsoons. It was aided by stable, good domestic demand, which grew at 8.9% in the quarter. It was from, if I look at our performance, I would say our volumes were further aided by the Indian operations performing better. The Dolby capacities were performing at optimal capacities. BPSL ramped up again well post their expansions. And JVML, the second converter, has also started, and it's operating now in the month of September at close to full capacity. So these have enabled volumes in the last quarter for us.
And do you maintain your 8 to 9% volume growth guidance for FY26? Because sales volumes for H1 has stood at or given you a strong fillip. And will you be able to cope with that kind of growth in H2 as well? Give us a sense.
I actually expect second half volumes to be better. Seasonally in India, you see the second half being stronger than the first half. Also, let us keep in mind that post the GST rate cut, there is a positive sentiment which is there, which should spur consumption. It's also got a tailwind of lower interest and lower inflation, lower income tax benefits, which will accrue to the consumer. So consumption should certainly pick up. CapEx by the central government is more or less on track. I think close to 40% is being done by up to August. So that also should aid the growth in the second half. So overall, second half volumes would be better. Our facilities in JVML will be able to deliver the full capacity in the second half. So therefore, from JSW side, also the volume will improve in the second half.
And give us a sense on FY27, sir. Will a double-digit kind of growth on the volume front be a fair ask?
So no, let me put it this way, that if you look at India has been growing in terms of demand in double digits over the last 3 to 4 years. This year also, we expect 8 to 9% growth in the country, which we have been maintaining. And I think you are seeing a growth close to 9% already. Going forward, our sense is that incrementally, we will continue to see growth of 12 to 15 million tons every year in the country for the remaining, let's say, part of this decade and maybe more going forward. So from that perspective, I think JSW is very well placed to capture this demand improvement which is there with our capacities which have come up, and further enhancement in capacity which is now going to come up by about close to 2 million tons from our blast furnace, which we have taken for a shutdown and augmentation of capacity in Vijayanagar, and some rebalancing of capacities in our other assets. In addition to that, our Dolby facility, which is executing the phase 3 of their expansion, will add another 5 million ton by September 27. So overall, I think JSW is very well placed to take advantage of the growing demand which the country is generating.
Right. Mr. Acharya, steel prices have fell 4% sequentially, right, due to the seasonal weakness in steel prices. Now that monsoon is behind us, do you think that prices will inch higher?
Yes, so we did lose some prices during the last quarter. Quarter one, we saw an increase, but last quarter, because of a, let's say, seasonally weaker quarter, plus I think multiple tariff-related headwinds which have impacted the sentiment at large. We see prices now having stabilized. I expect between November and December, the prices in the domestic market should also improve. Currently, the domestic prices are at a discount to imports, and I think that part of that would get bridged in this coming few months.
And give us a sense on how the EBITDA per ton is evolving. It's come in much better than estimates. Let me give you credit where credit is due. But how are coking coal and iron ore prices trending, and do you expect spreads to improve in H2?
So on the coking coal side, last quarter we had a gain of about $6. We had guided between $0 to $5, and we were able to achieve about $6 through a better blend. Going forward, I think coking coal prices internationally, PLV has gone up a few dollars, so we will see maybe some increase in the October-December quarter, maybe between $3 to $5. However, on iron ore side, we see that there is a decline, which is likely in the next in this quarter. The prices in India have been elevated and are are not actually supportive of how the steel prices have moved, and we expect therefore the iron ore prices to go down. On the efficiency side, I think we are the full effect of the JVML operations will play out in H2, so that should give us some advantage. On the price side, I already mentioned to you, so higher volume, maybe better efficiencies, and higher volume, I think, is the story for the second half.
Right. Mr. Acharya, the Supreme Court has now dismissed the appeals filed by the erstwhile promoters and certain operational creditors, right? An approved NCLT order approving JSW Steel's resolution plan for BPSL. Tell me what next now? By when is this likely to be resolved?
So the Supreme Court result, the Honorable Supreme Court has given a favorable kind of a ruling for this BPSL case. They have upheld the NCLAT order, and I think this is a big positive for the IBC process which India has launched. So as far as we are concerned, I think the resolution plan has been approved, and the ruling is quite clear in terms of law. So we do not see, as per our legal advisors, any impediments as we go forward with this asset now.
All right. Thank you so much for coming in and speaking with us, Mr. Acharya. We'll leave it at that. Q2 numbers.